During trading on Monday, only about 20 companies, or 4% of the stocks in the S&P 500, gained in afternoon trading, and the S&P 500 finished down 767 points. And of course, the pundits piled on. As an example, John Higgins, the chief market economist of Capital Economics, forecasts that the S&P 500 will fall by another 15% by the end of this year. Other stock market geniuses also added their 2 cents worth, making comments like China's retaliation was massive, adding that on a scale of 1 to 10, it's an 11, citing that the Chinese government called on state buyers to halt U.S. agricultural purchases. Well, Mr. Genius, the Chinese have not been buying, so any halt in that non-buying means nothing, unless somehow two negatives equal a positive. But good luck with that. In my humble opinion, this is no time to panic, and this opinion is echoed by a few others. First, J.P. Morgan Chase put out a statement earlier today saying that as equity investors are racing for the door after the last escalation in U.S.-China trade tensions, their strategists say that this is an opportunity to buy more stocks. Now, I just want to add a caveat that we need to be prudent and follow a good strategy. Another prudent investor is Kyle Bass. And as a side note, I suggest you watch the interview of Kyle Bass done back in about March or May of this year on Real Vision. He has great insight into the current circumstances, but in brief, he's trying to bring proper perspective to the situation. He says that we should not get lost in the bigger picture, which is that the Chinese economy is roughly 12 to 13 trillion dollars in terms of US dollars, while the US economy is about 20 trillion. So even if the US were to put 25% tariffs on the entire lot of about $500 billion of imports, we're only talking about 100 to say $125 billion on economies of 20 and 13 trillion dollars. The bigger issue is if the Chinese economy collapses. But alas, that's a discussion for another day. Okay, enough of that lecture. What this video is really about is laying down some basic understandings how I move through the charts when making a buy decision on a stock. And this video was inspired by Michael Burns, who is new to investing and wants some better insight into the chart process. So, given the amount of interest in AbbVie, I thought I would use that stock as an example because if you were watching the market today, it was pretty important for AbbVie. And given that today's market was like a lemon, let's take that and make some lemonade with AbbVie. So to start out, I always use the 20-year and monthly frequency. Essentially, if I'm looking at the 20-year chart on a monthly basis, if the stock doesn't show well up on the oscillators, then there's no reason to go any further than that. So that's what I do. And actually, oftentimes I will check the chart before I check any fundamentals. So let's go into this one here. Start off with the 20-year monthly chart, and we're looking again at AbbVie. And I have not looked at the recent reporting, the earnings report from AbbVie from just the last week or two. So here we're looking at the stock chart settings, as you can see at this point. And for the most part, I believe that these are the default settings, with the exception that in chart size I use a 1000, the height I use 500, and then in the indicator size, the height I use a 300, and that's essentially for the video. And you can use whatever settings that you want. Now, you have all these different choices here, and I think the default is the exponential moving average of 20, 50, and 200, and you've heard me talk about that quite a bit. And I really don't use a simple moving average, and I don't use any of these indicators either. Now into the lower indicators, you can see that I've got some of these boxes checked here. And as we go down, you can see that I have the MACD. and then the MACD histogram, and the default settings. Again, I believe these are the default settings at 12, 25, and 9, and the histogram also at 12, 25, and 9. And then, of course, here into the price rate of change, I have that set on 16 and 8, and then the relative strength index, the RSI, at 8, stochastics at 15.55. I do have volume, and there's nothing that you can change on that. And then the Williams R at 12. Now, again, I hope those are the default settings. If not, I would just use the default settings. Now, if you want to know more information about each of these different oscillators, you just simply click on the highlighted blue text, and that will bring you to an explanation. And if you want to go even deeper than that explanation, you can do some research on the internet. It's easy enough to do. So I'm going to start with this, and hopefully this is a good basic understanding. Again, if you want to go further, that research is out there and it's easy to obtain. So we're starting here on the monthly chart for AbbVie, and the symbol is ABBV. And for disclosure purposes, I do not hold any shares in AbbVie at this time. And although I used a 20-year chart, AbbVie hasn't been around that long. It's only been around since, say, 2013 or so. I can't remember exactly. So that's why only this time frame shows up in the chart from 2013 to 2019. So as we can see here, and we've talked about this previously, a couple of things that I like is simply the nice upward move in the chart, and we're sitting there at 65.23 at the end of today's trading on Monday, and we were down just about 12 cents. And we were up, though, most of the day. And that's why I was saying that this is an important day for AbbVie. In the lead-in, only 20 companies, or again about 4% of the S&P 500 stocks, showed gains in afternoon trading. And AbbVie did not end up with a gain, but for the good part of the day, it was showing good positive movement. And given how bad trading was today, that was significant. So I'm going to give you a spoiler alert right now, which is we may have seen the bottom in AbbVie. But that isn't necessarily what I look at when I'm going toward a company and I'm analyzing the company, at least by the charts. So let's move down and take a closer look at some of the other oscillators. Into the histogram, excuse me, the MACD, you can see that it topped out at that point there, and here's the current level. Now, there is a bit of an acceleration in the fast line as it went down below that zero line. So there is a big difference between the fast line and the slow line. And that's one of the biggies for me. I'd rather see something like back here where the MAC is bottoming and then starting to move up through the slow line. And my trigger point is when the fast line does go through the slow line. You don't necessarily get the absolute best buy, but to me it's a balance between the best buy and risk. And I like to lower the risk. And in my mind, having a buy point at this time when the fast line moves through the slow line, that's a lowering of the risk, because at that point the probabilities definitely tell me that this thing is going to move on up the top side. And it stopped out here, and my sell point was probably at this point here when the fast line moved back through the slow line. So that's simple enough. But it looks like we're accelerating here, but I think this is going to change relatively soon here. We are in early August, and these measures on a monthly measure do change throughout the month. So we'll see some impact of trading here coming in the next few weeks or so. Looking at the histogram, you see just very a little bit lower of a red bar here, which means that the negativity was accelerated. But again, I think that's going to change here pretty soon. Moving into the price rate of change. What I like about this is it had a bottom at that point there. It came on up. The fast line came up toward the slow line. It did get reflected back at that point there, but the reflection is coming down, and then now it's kind of going a little bit sideways. So there's some strength in that move there. And you see back here all the sawtoothing that it had done in the past. And it's going to do some more sawtoothing down here. But the point being is we've hit that bottom there, and if this continues to go sideways, then at least by the price rate of change, that was a maximum negativity at that point, and then we're going sideways, which is kind of the next formation before the fast line moves up and through the slow line. So you look for that sideways move in the fast line before it heads up through. So each of these oscillators will give you such again as a price rate change. This point here, that was a maximum negativity, and that was a few months ago. So some of these things are going to give you a heads up a few months prior to the buy point. All right, moving here into the RSI, we're still at a relatively weak 28.03, and it still hasn't stopped heading on down. But as you can see, the move it was heading down south, and then it did say turn to the side to go a little bit sideways. So definitely the momentum is slowing down. It may not get to that 20 to 0 area here, which is the way oversold territory. We might not get that low. It might turn here near this line, which is probably at that 30. Moving here into stochastics, this is an interesting one as well. We can see that we had that move here. It peaked at that point, and then it turned 90-degree turn, tried to go through, the fast line tried to go through the slow line, but got reflected back. But the reflection is now sideways, and it's moving in parallel with the slow line, and that's an improvement of this formation. So it may run parallel, but sooner or later in the next month or so, it is going to turn up and through that slow line. So watch as the fast line gets closer and closer to the slow line and then moves through. You can go and see some examples of that before, such as in here. This isn't such a great example, but it's a possibility. So moving now down into the volume. The volume, we had some negative volume here in several months or so, and we only have a small red bar because it's just the beginning of the month of August. So we'll see how that climbs throughout the month, and we just continue to watch that. Now in here to the Williams, we had that maximum negativity at that point, which was in late 2018. We're almost there. We're at 97.85, so we're getting pretty close. But given how bad today's trading was, plus how bad things were last week, that's not too bad of a showing, at least under the current circumstances. So, in my opinion, this was maximum negativity. We may be getting close to that, but I think that if it does, this is just going to be another point there. And I think just looking at the general trend here in your mind, you ought to be able to start seeing a bottom or basing in the Williams. Back on up to the price chart. The other thing in the price chart, once we get into, say, the weekly or the daily chart, you can see that it's setting up a bottom in this area here. And now this goes all the way over, and this is not going to be a very good straight line. But other technical technicians would take a look at this and see these as important characteristics in the price formation. I don't look at that as closely as I look at the other oscillators. So let's just talk about something else here. Now, if you're a captain of a ship, when you start to turn the ship isn't going to make a turn immediately. It's going to take a while, especially if it's a relatively large vessel. So that's how I see these oscillators. I see them as getting an indication, say back here, or perhaps even here, that the ship wants to turn. But it actually doesn't turn until later on down here. But you can actually see some of the signals before we get to that point. You can see how the fast line's moving up toward the slow line. It got reflected back, but it's definitely strengthening. And then it got reflected and then it attempted again, and this attempt was successful. And you can see the improvement in the chart as we go through. And you can just take a look at each of these oscillators and see the improvement. See how far down that was compared to here in the histogram. Going through into the price rate of change, you can at least see that the slow line here through here is bottoming and turning up. Now the sawtoothing that the fast line is doing, it made it through at this point, but it went back down at this level here and then up through relatively quickly. So at least in my mind, both the slow line and the fast line are improving through, say, 2016, and then finally it went through and on the way up. So you had several months of an idea that things were improving. Back here into the relative strength, we hit this bottom once and twice, and then we were on our way up. So once it crossed that 50 or midline, you saw it cross at that point here. That might have been a buy decision, but some of the other oscillators are going to keep you from that. And then we got the next time that it moved back up and through, and that was probably a pretty good buy opportunity. It came down here and reflected on up. And in my mind, that would be sort of a confirmation of an improvement in the RSI, that it didn't head below that 50 line. It got reflected and on up. So at that point there, that was pretty significant as well. And then down here into the stochastics, we kind of talked about that. This level was well below the level up here. So definitely some improvement. So even if you didn't have your buy point until some point later, you knew for almost a year that things were improving. Now, this time frame is shortened here when we're looking at the current time frame. It's pretty short. So for me to say that we may have hit the bottom, that is a possibility. And you'll see that, say, in the weekly and the daily. But it might not be. There's still a lot of separation between the fast line and the slow line in that MAC. And that's my major oscillator, my major indicator is when that fast line moves through the slow line. So for me, I'm not going to get a jump start on the buying. Some easy money may be made down here, but for me, if I was interested in AbbVie, I'm going to wait. And even if you do wait, you're going to lose out on some of the easy money that came in. Say if you perhaps bought at that point there, bought there, or even bought there. You might call that easy money. But for me, I'm going to be buying here in this area, and I'm still going to make enough money up through here and then down to the sell point, which is probably someplace around here. I'm still going to make enough money there. I don't need to be greedy. I don't need to jump start this thing, because often enough when you do jump start that, you can get burned. So I like to wait for those liabilities in buying too early. I like to see them burn off and watch those oscillators improve and then get multiple indications from multiple oscillators of a buy point. I just think doing that is reducing your risks. So now let's go to the weekly. And so now I move to the weekly analysis, and I'm looking at 4-year weekly on AbbVie. And I only move to the weekly chart if, number one, the monthly chart and all the oscillators meet the qualifications, and number two, I've conducted a full analysis of the fundamentals. And if that meets my qualifications, then I'll move to the weekly. And if not, then there's no use in looking at the weekly or the daily. So going back in time, I think we figured that the buy point was somewhere here in early 2017, and I'll mark it there. And I'll mark it here. So you can kind of get an idea of these oscillators as you move through and how things look and qualify for a buy point. So more or less in that area there, and continuing on here, and we'll go through each of these once again, and then into the volume, and then into the Williams at that point there. So back up here to the price chart, and you can see that things are riding along the 20 EMA from say early 2000 on, and we've come down for a little hesitation in the price movement, and that's where you jump in. And that's what it looks like on the Mac. You've crossed through the zero line. The fast line is on the upper side of the slow line, and you're starting to elevate. Looking here at the histogram, you are again on the top side of that zero line. And then into the price rate of change, definitely you have a basing here, and then you're moving on the way up and crossed over the zero line. And here into the RSI, you've definitely got movement, positive movement here. You're on the top side of that midline or 50 line. Things are improving. And here as well, stochastics, same thing. And then also landing there with the Williams above that 50 or midline. And definitely your bottom point was there and things are improving. So that's what I kind of look for. So what we're looking for today is pretty much the same thing. And we've hit this 65.23 point right here, but that really hasn't turned other than today. And today was a very slight movement, but it was a very important day because of how negative the rest of the market was. So that is a very interesting price point. Now, the MAC on the fast line here hasn't turned yet. So I'd like to see a turn in that. I'd like to see a turn also in the MAC. It is slowing down. You can see it's slowing down. So it's going to bottom here and turn probably pretty soon. Same thing with the price rate of change. Now the RSI is quite a ways down here below any other point. So it did turn, but I want to see that turn and then some improvement in that, as well as in the stochastic and into the Williams. So basically, I'm looking at the weekly and the oscillators are looking still relatively weak, not showing much improvement. And I'm going to want to see more improvement in these oscillators. And if you remember from the monthly chart, the fast line on the MAC, there was a large separation between the fast line and the slow line. And that large separation means that the weekly oscillators are going to trundle along for a while before they really start showing some improvement. So the price may have hit a bottom, an absolute bottom, and may be on its way up. But I'm going to want to temper or mitigate my risks. And so for me to mitigate those risks, I'm going to want to see some more improvement in the weekly chart here. But let's just go through it and let's now move to the daily and assume, say, everything's fine with the monthly and the weekly charts. So let's look at the daily. And now looking at the daily chart, I think the thing that pops out is simply the reflection off of that line there. And essentially we're dealing with a double bottom here. So I think it's going to be successful, but only time will tell really. And being that not much improvement has been shown in the weekly, I'm not surprised that we don't necessarily see any real improvement here in the daily either, but the improvements will show up in the daily before they do in the weekly. So looks like the price chart is dealing with that double bottom. We'll see what happens here. Now, looking at the MAC, you can see that there was a low there, but there was a lower low here. And subsequently, the fast line did move up and over the slow line, but it's still kind of tangled here at this -2. And I want to see the slow line and the fast line really improve, bottom here, base here, and start moving up toward, say, -1, and maybe even as far as the zero line. Definitely you can see the improvement in the histogram with the movement up that way strengthening. Here, price rate of change, it is looking like it wants to try to bottom here, but no real absolute sign yet. Maybe these levels there, you could say that's improvement, but we're at a -5, and I'd like to climb up toward that zero line as well. And then here into the RSI, we're at a very weak 21.59. There is a little bit of improvement from that point there. So we're still here, and it looks like it may stay up above that oversold territory and then start heading up here. But other than, say, some slight improvement, I want to see some more improvement and moving up toward that midline as well. And the same thing here for the stochastics. It's looking that it wants to try to base. Fast line moved above, moved back below, still is below as of today, but I would imagine that's going to pop up here. Uh, the fast line is going to pop through the slow line and head up there. And we want to see that definitely above the 20 and toward that mid 50 line. Volume, not much to say about that. And then the Williams, same sort of thing. You can kind of see some improvement occurring here. It does look like it's basing, bottoming there with this upward movement, a little bit of strengthening. And then I would imagine that this may do some sawtoothing, but it's going to be heading up here pretty soon. So essentially, that's what I do. All rules apply on the monthly, the weekly, and the daily. It's all the same rules. So just keep all those rules in mind. And really, you don't have to write any of this down. Just keep following. I do this once a week on the S&P or some of the other indices. So just follow along. You don't have to take notes. Soon enough, it's going to sink in. And don't be in any hurry. You've got a lot of time. Be patient and just follow along and learn, and you may have the opportunity to develop your own understanding or your own rules. Nothing saying that you have to follow mine. I'm just presenting to you my humble opinion on how to read these oscillators and the charts. So hang in there. If you're not a subscriber, please subscribe. If you are a subscriber or a viewer, follower, stay with us because this is going to be an interesting path in the stock market. And so for today, that's ChewDog Charts. Thank you.